Everyone thinks the SEC stops fraud. It doesn't. Most people believe the Securities and Exchange Commission is some kind of financial police force, that it catches bad actors before they hurt ordinary people, that it's out there, watching, preventing disasters. But here's the thing, the SEC doesn't prevent fraud, it investigates it after the fact. It's not a shield, it's a mop. The SEC was created in 1934, right after the stock market crash wiped out millions of regular people. Congress said, "We need someone to make sure this doesn't happen again." So they built an agency with a specific job, enforce rules about who can sell securities, what companies must disclose, and what counts as fraud. Sounds protective, right? But enforcement is reactive. A company hides profits. Investors lose money. Then, months or years later, the SEC investigates, finds wrongdoing, and issues fines. The damage is done. The people who got hurt don't get whole. The company pays a penalty it can often absorb. That's how it actually works. So what does the SEC actually do? 3 core things. First, it requires companies to file financial statements, 10Ks, quarterly reports, so the public can see what's really happening inside. Second, it polices insider trading, making sure executives can't use private information to profit unfairly. Third, it registers investment professionals and brokers, setting minimum competency standards. Think of it like building code inspections. The inspector doesn't prevent a faulty building from being built. They show up after construction and check if rules were followed. If they find violations, they issue citations. Transparency and accountability after the fact, not prevention before. The real power of the SEC isn't its enforcement budget, it's the rules themselves. By requiring disclosure, the agency creates consequences for lying. If you know your financials will be public and audited, you're less likely to fabricate them. The system relies on transparency to deter fraud, not on agents catching criminals in the act. So when you hear about the SEC fining a bank millions or charging an executive with fraud, understand what that means. Someone already got hurt. The system caught up afterward. The SEC's real job isn't stopping the next crash, it's making sure the next one's a little harder to hide. Understanding how the SEC works, its limits and its actual role, helps you see how markets really function. Not as perfectly policed systems, but as human systems with rules, enforcement, and gaps. If you want to understand the mechanics of how financial systems actually operate, subscribe. There's a new explanation of how money really works every week. This video is for educational and informational purposes only and is not financial advice. Always do your own research. Subscribe so you don't miss the next breakdown of how financial systems actually work. This video is for educational and informational purposes only and is not financial advice. Always do your own research.